everybody to Unconventional Wisdom, the CSE Investment Show /podcast. And we're going to have a good roundtable discussion today. We have our guest, Randy, out in Phoenix, and Keith up in Maryland, Cezanne up in Arkansas, Joni over in Georgia. Dirk, who is our CEO, is not here today. He is in Puerto Rico and is otherwise engaged. And we have Marcus, who's our engineer and runs all this stuff. And we're going to have a couple of call-ins today, hopefully. Our phone number is 214-377-1108, 214-377-1108. And you can also email us at podcast@compoundstockearnings.com, podcast@compoundstockearnings.com. We get those emails now. We will answer them and be directed to whatever presenter we have here that has expertise in your particular trading technique. And you can also call, and we are expecting a couple phone calls, but don't let that stop you. If you want to call in and give an opinion or ask a question, that'll be great. We always start the show off. I kind of give an indication of what the editorial which you receive, if you subscribe to it, you receive tomorrow. And this is going to be an interesting one, and I'm going to be talking about how using the CSE techniques are good for your health, and how we should really be included in company health plans. And so it's going to be really interesting. It's based on not an editorial, but an article out of Fools in the Fool publication, and it talks about millennium's financial stress is worse than it's ever been. Joni, are you a millennium or are you an Xer, or what are you?
I think technically I'm a generation Xer.
Xer, yeah.
But in my mind, I'm a millennial.
Anyhow, it appears, I'll just read this because it's really interesting. It says a new study shows that millenniums are far more likely to spend hours at work concerned about their financial stress than their older colleagues. For example, about 67% of millenniums say that financial stress overtakes their ability to focus and be productive at work. And that's according to a report from Bank of America Merrill Lynch Workplace. Of course, just working at Merrill Lynch would be enough stress right there. But that's more than twice is that of baby boomers, which I'm before baby boomers. It's called the Great Generation. Yeah, 32% of all baby boomers worry about the same thing. The impact doesn't stop at the productivity at the workplace. More than half of millennials, 68%, say financial stress has had a negative effect on their physical health. 51% of baby boomers say the same thing. Stress can wreak havoc on productivity and employees' health. And in the last paragraph, well, here's another one interesting. It says, in fact, millennials today earn about 20% less than the previous generation, meaning the baby boom generation. But I thought that was interesting. Well, most of the time they earn less than half because they got crummy jobs, because they got crummy degrees from crummy colleges. In the very last paragraph, it says, having access to educational content that is personalized and relevant, we're talking about financial education, creates a culture for wellness, not dissimilar from what many companies do now around their health care benefits. So the editorial will be on healthcare benefits of using CSE techniques. So since Joni seems to be the one that's closest, I don't know how you compare to Keith. Keith, what generation are you?
Well, I'm at the end of the baby boomers, I think. So, yep, end of a boomer.
Yeah, and I was in the great generation by about a year. So, and Randy, what are you?
I'm a baby boomer.
You're a baby boomer, that's right. Let's come Cezanne. Cezanne, what are you? We're talking about, you can listen to us, the millenniums and the baby boomers and the Xers. What are you?
I don't know, one generation after Joni's.
You're not after me.
I'm just kidding. I don't know. Wait, what are we, Joni? You're older and wiser. You should know these things.
I'm pretty sure we're Generation X. We're X.
Are we X?
I think we're X. But I told him in our hearts and minds we're millennials.
That's right.
Well, let's throw it open then, and let's start with Randy. Randy, what do you think about what I was just talking about what the content of the editorial is going to be this weekend? Do you think that somebody that listens to your services and does your trades would be a healthier person or a less healthy person?
Well, I think they'll be much more healthy. They will actually have control over their own finances instead of hoping that somebody else is going to do the right thing for them. people eventually will realize that nobody cares about your money more than you do, and
Now, Randy,
you're relying on somebody else.
Randy, there you go again. That's a statement I say all the time during our seminars, and you always repeat. And here you're doing it on the podcast. I just
I
cannot.
know you rub off on me.
I guess so.
It's like osmosis. It just soaks right in.
I guess so. Okay. Yeah. Go ahead. I'm sorry.
But and more and more you hear about, Social Security is not going to be around. I heard the other day, I think when Social Security began, there was like 47 people paying in for every one that was taken out. And now it's 2 people paying in for every one that's taken out. And pretty soon it's going to flip-flop, and there'll be more people taking than putting. And that's like a Ponzi scheme. That will not last. There's no way it can last. And so, especially like the millennials and those earlier generations now, or younger generations, it's highly unlikely that Social Security as we know it today is going to be around. So they're going to have some way of generating income while they're in retirement.
Randy, think of it this way. You and I are both, pretty close to the same generation. And we're going to have to depend on Cezanne and Joni.
Yeah.
If that doesn't give you some, fear, right there, it's bad enough.
One of my granddaughters, it turns 5 today. So she's all happy that she's one whole hand old, but we're going to have to be dependent on them even, because I plan on living a long time. So it'll be even the younger kids that are going to have to keep working to support me.
The whole point is they need, financial education. And I don't know of any schools that really give financial educations like a junior high and up. Maybe there's some anyhow. So Keith, what's your thoughts on that?
I would agree that using our techniques, it allows you to be proactive and take advantage of, first of all, the gains that we have, but also the just knowing how messed up the regular brokers are, that they don't have a clue as to what's going on, and they're just at the whim of the market going up or down. And so many of our techniques take advantage of whether you can take advantage of it, whether the market's going up or it's going down. So that's already 2 steps ahead there, and being able to get your arms around it, and it's not rocket science. I think it's a grasp. People can grasp what we're trying to do here. So anyway, I think it's got to lower your blood pressure.
When you get older, your voice, it's hard to say some words sometimes.
Yeah.
The other thing, you mentioned the brokers again, they're totally incompetent, and they are. And don't forget that the new fiduciary rule went into effect the 1st of June, which means they have to put their interest behind that of their customers. Well, it's going to be impossible. There's no brokers, no insurance company. Nobody's going to do that. It would just escalate what I've been saying for years about there'll be radical changes in the brokerage business. More people will have to do their own trading. They'll have to do it on online trading. And online brokers are great. There's never any controversy. All the ones that they have all the scandals and all the problems with are the ones that are the main street, the ones with people in them. And so it's going to be interesting to see how it happens. And my projections usually come true. I've been talking forever about the waste of young people going to college and schools. They need to go to trade school and learn a trade first, then they can go to college if they want to. And today I know that President Trump was up in Pennsylvania somewhere talking about that. And now, all the financial experts begin to say the same thing I've been saying for years. Learn a trade, and it doesn't mean that you can't go to school, but at least you don't go out and incur tremendous amounts of debt and end up with some degree that's totally absolutely useless. But that's another subject. So let's turn to our
Joe,
and see what their thoughts on this. Are y'all stressed? Well, of course, you're not at school anymore, but what do you think? Your contemporaries or any people? Do you know any people in school, or are most of those people gone now?
Wait, us?
Yeah, go ahead, say something.
We don't know. We don't know anyone in school. Sorry, except our kids. People, we don't really talk about our work very much outside of here. But it is interesting to hear people, people plan on working longer, I think. I don't know if Joni would agree. We don't have as many people retiring, or early retirement, as, they kind of are planning on working a little bit longer than maybe the previous generation.
Well, the reason they're working longer is because they don't know, they don't know how to invest their money, and they've relied on Main Street for so long, and Main Street's a complete failure. Otherwise, they could retire. They could retire early using our CSE techniques. You start at 25, you retire at 35. With millions of dollars instead of a few $100,000. It's got to last you for 47, 57 years, and that's the problem. Is that the whole financial community has totally failed. Everybody in the country from a standpoint to make them think that they're going to be able to retire, because most of them find out that they can't. They can't do it. So it's just crazy. Joni, your son just graduated school. Is going to be going to college. Did he have any financial education in that school?
I mean, not a proper one, not like we would like, but they don't really focus on that until they get in college, which is what you're saying is maybe just a little bit too late. So
I think they focus on it in college.
Well, and only if that's your major. And even if that's your major, it's such a generalization that you learn a small bit about a whole lot of stuff. So then it's not even really that valuable. But I will tell you that from what Cezanne and I do, and Keith and Randy, that if anything, while we're not yet thinking about retirement, it does offer financial freedom. And so rather than depending on insurance policies or spouses to hold us through, we can generate income on our own. So when I first started with compound stock earnings, that was some of the freedom that I felt, and some security and some release. And so I don't worry. I don't have the anxiety that you were talking about earlier about those millennials at work and stressed because of the freedom of taking control over my own accounts.
Well, millennials would not have that stress. They would have the freedom had they gone and learned a trade first, because they know they have something to always go back on. Mm-hmm. Right now, based on all the information that's come out in the last few days, the trade school people that graduate trade school not only don't have any debt, because a lot of times, where they went into plumbing, electricity, becoming a doctor, somebody else pays the bill for them. And except for doctors, plumbers, electricians, and welders make as much as 2/3 more than college graduates. Now that's astronomical, but they've always got that to fall back on. You always got something to fall back on. That's what happened to the middle class. The middle class was strong back when I was back in the 70s, because most people that graduated high school learned a trade. They didn't all go to college, and they had good jobs. And they become leaders in the community, and they became wealthy. And then for some reason, they thought they had to send their kids to college, and sort of like a death sentence. But
Joe, the TV little headline right now is "Moments Away, President Trump on the Apprenticeship Initiative." He's going to give a speech on what you just talked about.
There you go.
Hey, Joe.
He's listening to us.
I have this is the logo speaking. This is interesting timing, because I had this conversation. My son is 16. He's got his first job this summer. He's working like 30, 40 hours. But his mom, who's my ex-wife, works for Fidelity. And she is telling him that he needs to put his money in Fidelity because she's earning 10% per year. And so I had this conversation with him last night, and I've been having this conversation, and I'm basically requiring him to come to the Dallas seminar next weekend, at least the first day, at least the first morning, first half, first day, because he, as I try to talk to him about it, even at his age, he's listening to his mom saying, come over here, Fidelity's safe. So you should expect to see my 16-year-old son at the next CSE seminar. That's all I'm saying.
Well, that'd be great. That'd be fantastic. Dirk's son just graduates next year, and he's going to a private school, and he just gets incredibly fantastic grades. Really, really smart kid. And he's already told Dirk that he's not going to college when he gets out. He's going to go and he's already lined up a trade school place. He's going to learn something. And he's going to turn around and go to school anywhere he wants to. Exactly.
And hey, one other thing, I've got Kathy is on the line now joining us.
Okay, he already has his college education paid for as long as it's a Texas school. It's not a matter of money. He wants to learn something first, and he's going to end up with no debt anyhow. Hey, we got Kathy on here. Kathy, how are you?
Good morning, Joe. How are you?
Well, fine. You're coming in loud and clear, and I appreciate you calling in. I was listening today for the people who listen to our podcast to Cezanne and Joni's. This is their long day on the and Cezanne's got a laundry your throat. It's every time you try to say something, you bark. But Kathy is one of their attendees on their seminars, which are 3 days a week, and she just had an outstanding day today, as did Joni and Cezanne. So Cezanne, why don't you take it, turn it over to Joni, and Joni turn it over to Kathy. Tell those fantastic transactions y'all did today, more than most people, particularly Fidelity. Marcus, they made more today than your ex-wife makes in a year. She's making it. Go ahead, Cezanne, then Joni, and then Kathy.
Okay, so my trade today was, I think, 8.6%. We were in it 20 seconds, I think. I'm looking it up right now. Maybe a little less than 20 seconds. And that's really just the time that it took to enter and exit the order mechanically. So what we do is, of course, we identify potential sweet spots for upward or downward momentum. And we identified one for Apple. We had actually tried to get into a trade before that, probably 15 or 20 minutes before. And we couldn't get in at the price we wanted to get in. And so we had to wait. And then we got into our actual alert trade, about 20 minutes later, and bought a put for $1.04, sold it for $1.13. So it was about 8.6%.
That's just fantastic.
On Apple.
Yeah. See, if you were a trader on Wall Street, you would have done a huge position. You could have gone home, had an incredible bonus, and not done anything for the rest of the year, because they don't make that much. They don't make that much for an entire year, much less on one trade. And Joni, how did you do?
I did a trade today for 4.4%, and then did one on Monday for 4.7%. So this week, sitting right at 9.1% for the week.
Fantastic. And now, Kathy, tell them what you did, because Kathy sort of mimics the trades, which other people can do when you're attending their Trade the Moment seminar. And so, Kathy, how did you do?
Well, I'm really pleased that I did very well this morning, Joe. I did an Apple call to begin with, and I actually didn't figure out the percentage, but Joni did for me, and I think it was 7 point something. And then shortly after, I did an Apple put, and that was for 8.6%.
Here you are, and you even did it while you were awake. I mean, or maybe you might have fallen asleep, because we talked on the seminar how sometimes you have a tough time staying. Where are you? What state? What time zone?
In Texas. I live not too far from where your home is.
Fantastic.
In Fort Worth. I'm in Grapevine.
Oh, well, fantastic. Great.
Yeah.
Come downtown and my window's marked with a big black X. You'll spot it. Well, that's fantastic.
I didn't sleep much last night, so I tried to actually do a trade Monday morning with the webinar, and I fell asleep before I could hit enter, fortunately. So I've been awake all night, and I managed to do them this morning. I'm kind of excited.
Well, that's great. That's great. And I know you participate. Are you on most of those seminars that they do on what they're on Monday and Wednesday and Thursday, right?
Yeah, Monday, Wednesday, and Thursday. I listen to almost everyone, plus Randy's Momentum on Mondays, and most of the covered calls on Wednesdays, and some of them on Thursday evening.
So now, are you
dedicated?
are you doing trades on Randy's Momentum trades or what?
Yes, I have done some of those, and I've done pretty well. And I actually don't have the percentages here. Most of my Momentum and Trade the Moment trades are still paper trading. They're virtual trading, and I haven't been able to do it for about a month. But before that, I had some Trade the Moments that were 9.8 and 9.5% for about 2 weeks of those. So I was really excited, and then I had a couple that went south.
Yeah.
And I was just about to go, off the virtual and real. So I'm really glad those happened, because they got me to pay better attention again.
Well, see, that's the beautiful thing about virtual. You're doing virtual. You're not, you can't possibly lose, but you can sure learn. And then you're already starting to do these real trades and getting outstanding results. That's just the beauty of the technique. So Randy, did you do anything today? I know you did. Well, I don't know that you didn't have a seminar this morning, but did you do anything on your trade the moments, or not trade the moments, momentum trades or whatever?
Momentum trade, we're still in the position from Monday, but last night from cover calls, one of my positions called out because there's weekly options. And in fact, there's actually an ETF that has options that expire every Wednesday as well as every Friday. So had a position, 8 days, 4% return that closed out last night. So it didn't matter if the market went down or anything today, because that one's already in the bank.
Exactly. Fantastic. And you know, so much turmoil this week. What with the Fed chief, you know, about raising interest rates or not raising interest rates, and what's finally happened? Have they raised the rates or not? I know they were talking.
They raised the rate a quarter point, and then they talked about unwinding, how they're going to start to unwind their $4.5 trillion balance sheet. Of course, that means that they just made up $4.5 trillion in thin air, and they're going to start pulling that back.
So Keith,
I'd like to know how they do that.
Yeah, so do they. That's what the market wants to know, is how that's actually going to work out.
So
Yeah.
Keith, how are you doing?
Yeah, doing well. We had a trade last week that closed out for 5.6%, and I'm up almost close to 70% for the year so far. So
Fantastic. That's just, you know, it just seems like everybody on the face of the earth ought to be wanting to listen to each one of y'all's services, just like Kathy, you know, and I mean, just incredible returns. Incredible returns.
Joe, you asked how they're going to do this. The FOMC is going to do this buyback kind of thing or whatever, and it's called sleight of hand.
Yeah, I bet so. Yeah, you know, and it's just all that stuff's so interesting. You know, of course they're just printing money, but people don't realize, and I keep harping on this, about these retirement plans. You know, particularly the ones that CalPERS out in California administers, which are municipal type plans just in California. Terrible returns. I mean, zero returns, minus 2% returns, and that's across the country in these retirement plans. There's trillions and trillions and trillions of dollars that are unproductive in these retirement plans. And just recently here in Dallas, you know, with the police thing, just huge. In fact, the state legislature had to pass some laws to keep these outfits from going completely out of business, and those people never getting any retirement. You've got to do this stuff for yourself. And more it shows. And I think more and more people will, as Main Street begins to unwind, you might say, because of this new fiduciary rule. And people will, you know, and besides that, we know that it's not good for their health to not do CSE techniques. And I say CSE techniques because it's obvious. You know, it's so easy. Return is what you need to build money to retire on, not savings. Savings is not even human. The editorial in last week's Cal report said that, and it wasn't. I mean, I picked that up from other publications. It's just not human to save, and so people don't, and that's why you have so many people that can't retire. Besides that, they get these minuscule, crummy returns from Wall Street that don't amount to anything. So you've got to start off with a few $1,000 when you're 25 years old, and you have millions of dollars by the time you're 35 years old, and you do whatever you want to do. You have to skimp and save. If people want to know where they can sign up for these seminars, go to our website, compoundstockearnings.com. You can sign up for the Cal Report, which is free. You get it every Friday. It's been published for now 15 years or so. And it has emails from all our clients and asking questions of our various presenters and myself, and we all answer them. You see those answers, and you can write in and ask anything you want. It doesn't cost anything. It's free. It's really a great report and shows you what can happen and what's going on at CSE. Randy has an incredible seminar every Tuesday from 7 to 9 p.m. Central Time. Introductory seminar. It's free. It's live. You can talk to him. You know, you can see all his charts and everything. You hear other people talking to him and his answers. It's totally, absolutely free. We have people that have been clients for years. They go participate in this Tuesday evening seminar just so they can ask him questions. And that's really good. But our site, compoundstockearnings.com, also has all of our seminars that are coming up listed on it. We're out for a number of months. Randy and I have the 2-day covered cost seminar this not this weekend, next weekend, 25th and 26th, I think.
24th, 25th.
24th, 25th. It's in Dallas, City Place. Been there for 15 years. And it's a beautiful auditorium. And you can come there if you're already been taking our seminars or taking one seminar or whatever. Once you've signed up for that 2-day seminar, you can come back free forever. And also your kids. We have, there's an email in this week's Cal report from a gentleman up in Boston that took his first seminar in Boston 12 years ago. And then things happened in his life and his business, and he got divorced and various things happened. And that was 12 years ago. And he never did do anything, but he's coming back. He's going to attend online, because you can attend any of these 2-day seminars online or in person. And he's also bringing his 14-year-old daughter, who was only 2 at the time that he took the very first seminar, because she wants to get involved. And I thought that was interesting. And he wrote and said, hey, you know, what would it cost me to get her added? And I wrote back to him, nothing. You know, it's just, you know, from 14 to 21, they can attend for free.
Joe,
So,
that's such a fantastic benefit too of all the compound stock earning seminars is
yeah.
the parents pay the kids for free, and they don't have, and they can even, after they attend at 14, 15, 16, they can still keep attending when they're 25, 26, 27. They don't have to stop like when they're 21.
Oh, absolutely. And this gentleman in Boston had the original, and Randy, you'll appreciate this, had the original workshop manual that we give people. Can you imagine how thick it was 12 years ago and what technique versus what it is today?
It was like a pamphlet, wasn't it?
Yeah, it was probably, at most, it was stretching to be even a half inch thick, and now it's 3 or 4 inches thick. And all new techniques, and so many of them, you know, that Randy's come up with. And, you know, everybody, Keith comes up with new techniques or a modification of our existing techniques, as does Randy and Cezanne and Joni. And so they all just do an outstanding job. So Kathy,
So I have a couple comments and a question.
Sure, go ahead.
Kathy. Well, the first one is for Marcus when he was talking about his son earlier. Marcus, if I meet your son at the seminar in Dallas, I'll be glad to talk to him about what you were talking about, because I learned that about investing with the 401k as opposed to now learning these techniques.
Absolutely.
And I would also say that we all have to rely on Joni and Cezanne. I think we'll be doing all right. The last thing I wanted to say was I'm going to miss the seminar for Joni and Cezanne in Dallas on Monday. I was so hoping we could have it in person. I know you've seen my emails about it 100 times.
That's okay. Hey, we're gonna have them on there. It's just, you know, logistics is just difficult. A lot of times the places, you know, they're either available or not available, or sometimes when there's a lot of demand for them, you really have to pay a lot of just tremendous amounts of money. So, but anyhow, online they're good. They'll be back live also. They've done them at the City Club in downtown Fort Worth. We might do some of those because that's a smaller venue. But you can still have a couple hundred people in there, and it would not be.
Well, that would be great, because we were really, Peggy and I were really looking forward to those, and we do them, you know, online every time, like we do Randy's and yours. But in person would be so fantastic.
Well, great. Well, you ought to come over this weekend to the 2-day. In fact, you said you.
I'll be there.
Oh, great.
Oh,
Okay.
she'll be there. They'll be in the second row on my side, Joe.
Well, you have many times people start on your side and end up on mine. You know. So.
Maybe we'll come sit over on your side for a little while, Joel, but we always wind up sitting. That was our place that we sat forever.
On my side?
On Randy's side, but it just happened to be that that's where we sat. No partiality to Randy or to you. Sorry.
You know what? Y'all sat on the second row in the center on the end of to our left as we're looking out. Right?
Okay.
Yep.
See? I know.
Right smack in the middle, so we're not playing no favors.
Okay. Well, listen, Kathy, we really, really appreciate you being on here today, calling in, and you're just doing great. And we really look forward to seeing you not this weekend, but next weekend at the 2-day. So.
Well, I'll be there, and Peggy will be there, and I really appreciate everything I've learned and continue to learn. I mean, I can't even tell you how much.
Well, before you leave, though, one thing, you were on our last cruise, left out of Puerto Rico,
yeah,
down through the Caribbean, and I remember y'all trading off the ship, and there was a I think a gentleman there that trades with y'all. Was that the person you had reference to in the conversations today?
Birthday
I'm
girl.
sorry, say that again.
Oh, wait, hold on. There's the birthday girl. We better recognize her, and then I'll get back to Kathy. Say something more.
Here, say hello.
Hi.
Oh,
Cutie pie.
She's 5 today.
birthday.
Yep, she's my middle one.
Fantastic. Okay, Kathy, I'm sorry. What did you say, Kathy?
Oh, that's okay. I think you had just asked about about the Caribbean cruise. Asked me a question about that.
And there was a gentleman on that cruise, I think was that the trading partner that you had referenced to a while ago?
No, Peggy is my trading partner, and my husband came with us too, but he's leaving all the trading to me. So Peggy became my trading partner, and he just says yay every time we make some money.
That's good. Well, again, thank you for being here. And I guess we can wrap it up. We've had a good podcast. And for anybody, again, that wants to check out our website, it's compoundstockearnings.com. It's a relatively new website, probably final form maybe 6 months ago. And it's got all kinds of information about signing up for our seminars, how to take, and what the benefits are. And when you pay for one, you come back forever and all that kind of stuff. And if you want to ask any questions, you can always call in to this podcast, 214-377-1108 during the podcast. And if you want to send us an email, and we can address the email during the podcast, we will also address it directly anyhow before the podcast. But it's podcast@compoundstockearnings.com. And so thank you, everybody. Thank you very much, Randy, Keith, Cezanne, Joni, and Marcus. And like I say, Dirk, our CEO's over in Puerto Rico this weekend. He'll be coming back Saturday, I think. And so, again, thank you all very much. It's been a great show.
Thank you, Joe.
Thank you. Thank you, Kathy.
And thank everyone.
Have a good week, everybody.
Bye.
Thanks, everyone.
Yes.
Bye.
Bye.